All right, so let's get right into it. We saw a huge surge across the markets this week, right? But what's really driving it? Well, it's a way more complex story than you might think, and it actually connects the dots between Washington politics and the crypto world. Yeah, that's the big question on everyone's mind, isn't it? I mean, we saw solid green pretty much across the board, even for assets like Bitcoin. So today, we're going to connect those dots, from a last-minute political deal in DC all the way to some massive regulatory wins for digital assets. Okay, so here's the game plan. First, we'll hit the big political news from the US. Then, we're going to unpack two huge regulatory wins for crypto. After that, we'll see exactly how the markets reacted. And finally, we're going to ask that tough question. Is this rally for real? Can it actually last? All right, first up, the political fix. Basically, a last-minute deal in Washington managed to swerve a government shutdown, and you could almost hear the markets breathe this collective sigh of relief. So here's what happened. The Senate, just barely, managed to pass this short-term funding bill. Now, this stops a government shutdown, but only until the end of January. The House is expected to pass it, the president says he'll sign it, so for now, we've dodged a bullet. And that gives us that little bit of short-term stability that, markets absolutely love. But, and this is a big but, don't get too comfortable. This isn't a long-term fix. It's really just a temporary patch. The Speaker of the House has already come out and said he's not really on board with the deal, which means, yep, we could be right back here in January, probably with even more political drama. Now, while all of that was going down, something else was happening. Two massive pieces of regulatory news dropped, and it created this perfect storm of optimism, especially for crypto. Okay, before we jump into that first bit of news, let's do a super quick refresh on staking. For a lot of blockchains, it's how things run. It's a vital function where you, the user, help secure the network, and for doing that, you earn rewards. You can kind of think of it like mining, but for proof-of-stake networks. The thing is, it's been this big regulatory gray area. Well, until now. And that brings us to this huge step forward. The US Treasury just laid out a clear path for investment products, we're talking ETFs and stuff, to actually participate in staking and then pass those rewards on to investors. This is a massive deal. It's basically letting these products offer a kind of dividend, and that is a complete 180 from the SEC's previously hostile view. All right, the second piece of good news. There's a new bipartisan bill on the table to give the main job of overseeing crypto to the CFTC. Now, think of it this way. The SEC is kind of like the super strict librarian of investing, right? All about the rules. The CFTC, on the other hand, is more like the cool, flexible workshop supervisor. The crypto world has been wanting this shift for years because the CFTC is just seen as being way more open to innovation. And if you want proof, just look back. The CFTC is the agency that approved Bitcoin futures way back in 2017. Now, did that open the door for institutions to short the market and lead to the 2018 crash? Yes. But as one analyst put it, it was kind of like a vaccination. It hurt a lot in the short term, but it ultimately made the asset stronger and really paved the way for all this institutional adoption we see today. Okay, so we've got a shutdown averted, and crypto gets two pieces of fantastic regulatory news. So how did the markets actually react to all this? Let's get into the numbers. Well, the S&P 500 had a really nice rally. And what's really interesting here is that a lot of the big tech names, the ones that had recently dipped below key levels like their 50-day moving average, they managed to climb right back up. Bitcoin? Oh yeah, it had a strong start to the week too. It tested that psychologically important support level over the weekend, and then boom, surged nearly 6% thanks to all this good news. And it wasn't just stocks and crypto either. Even a classic safe haven asset like gold caught a bid. It started rising on that general wave of optimism coming out of DC. But was this rally as solid as it looked on the surface? Let's peel back a layer here, because some of the data underneath tells a much more complicated and frankly more cautious story. Okay, take a look at this. You can see this growing gap between how the stock market is doing and how the average person actually feels about the economy. Some analysts have this pretty intense name for it, the jaws of death, and it points to a really serious disconnect. Why does this matter? Because a healthy market usually needs strong consumer spending, right? And when confidence drops like this, it can be a warning sign of future economic trouble that the stock prices just aren't showing yet. And get this, despite all that amazing regulatory news for crypto, investors in crypto ETFs basically shrugged. I mean, this is kind of stunning. We saw a tiny, tiny inflow of just 1.2 million into Bitcoin products and literally zero for Ethereum or any other altcoins. It's a real head scratcher for sure. And then there's this little gem from a recent Goldman Sachs report. It basically says the health of the entire S&P 500 is becoming ridiculously dependent on just a handful of AI megastocks. It's like, as Nvidia goes, so goes the rest of the market. So, when you put all these pieces together, you start to see some pretty clear warning signs. Consumer confidence is in the gutter. The big crypto ETF investors are just sitting on the sidelines. A key positioning indicator from Goldman is at a 5-month low, and the whole rally is being held up by just a few tech stocks. It really makes you wonder if this rally has the broad support it needs to keep going. So that leaves us with the big question, right? Are we actually seeing a real, broad recovery that's built on something solid? Or was this whole thing just a quick sugar rush from some good news, hiding some deeper problems? Honestly, the data suggests we should probably stay cautious. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.